The U.S. is in the midst of an unprecedented economic downturn, and many of us have questions about what the path forward will look like for the economy. In this series, we'll be speaking with top economists, remotely of course, asking them questions about everything from unemployment to the stock market to debt to longer-term economic inequality. In this episode, we'll be speaking with Mark Zandi. He's the chief economist at Moody's Analytics. Okay, so what's your view of how long it's going to take the economy to fully recover? Are we looking at a V, a U, a W? We've heard all of these letters to try to describe what the rebound could look like. Where do you stand?
The damage to the economy already has been too significant. There's going to be too many business failures. Even as businesses reopen, a lot won't. And so many of the people who've lost their jobs won't be able to get back to work. So there's no way this is going to be a V. If we do get a vaccine or an effective therapy, at that point in time, we'll start to kick back into gear. But even then, it's going to be a bit of a slog because this is doing a lot of long-term damage, to our fiscal health, to the process of globalization. It has all kinds of implications that I think we're only now starting to get our minds around. So I don't think we get back to anything we would consider to be normal until perhaps mid-decade at earliest.
How is the stock market going up so much, and why is Wall Street looking pretty good while Main Street and while the economy is really struggling?
Well, I think the market's taking a lot of solace in the response by the Federal Reserve and other central banks to the crisis. I mean, the Fed is all in. They're going to do everything they need to do. So if you're a stock investor listening to that, that's a signal that there's a limit to your downside, that there is a floor under stock prices. But I do think, having said that, stock investors have gotten ahead of themselves. They're putting too high a probability on a V-shaped recovery, and once it becomes obvious that that's not the case, once they actually see the bad corporate earnings, the defaults, the delinquencies, the business failures and bankruptcies, once that is no longer a forecast, but that's a reality, I think we're going to see another leg down in equity prices. I don't think the script on this bear market has been written yet.
Looking at the recovery right now, are there sectors of the economy that you think will bounce back faster than others, and are there other parts of the economy that are going to be slower to come back and maybe might not ever get back to what we see as normal?
Yeah, I mean, I think construction, manufacturing, those industries will get back up and running more quickly. They've been less disrupted by the business shutdowns. On the flip, the obvious, any kind of activity that requires bringing lots of people together or for people to travel, that's going to be a long haul. And
do you think that there are any jobs that might never come back? Are there any jobs that are particularly vulnerable here for the longer term?
Well, we are going to see a lot of business bankruptcy and failure. A lot of companies just don't have the financial resources to navigate through, and they're not going to be able to avail themselves of the government programs designed to try to help them. So a lot of smaller businesses, there's 8 million business establishments in the country, 4.5 million have fewer than 4 employees. Those are the companies that are most likely to fail and no longer be with us. And that's across all industries. But I do think a lot of businesses in the leisure hospitality, retail trade, travel, all those businesses, all those activities are significant risk. Movie theaters, amusement parks, sporting venues, concert venues, all those things are going to be a shadow of what they were for a long, long time. And people and businesses are going to have to change their business model quite significantly and adapt. Those jobs in those businesses aren't coming back, at least not anytime in the near future.
Do you think that there's been enough stimulus from Congress and from the Fed with what it's done so far, or is another round of stimulus needed?
I think another round of fiscal rescue is absolutely positively necessary. Even if I'm wrong and the economy experiences a V-shape, nobody knows that. We don't know. So it would be prudent to plan as if we're going down a darker path. That's the one lesson we learned, key lesson we learned from the financial crisis, and that is that Congress, the administration, the Federal Reserve have to be very aggressive, very rapid in their response, and they can't let up. They have to continue to provide that support until it's absolutely positively clear that the economy is free and clear. And we're nowhere close to that. So it would be incredibly, I think, wrong. It would be a mistake if lawmakers take their foot off the accelerator and don't continue to provide more help to the economy. So aid to state and local governments seems like an obvious thing that you would want to do. Providing more funds to businesses so that they can continue to keep workers on their payrolls as opposed to laying them off and having those workers, unemployed workers, go get unemployment insurance seems like a very reasonable thing to do at this point. And continuing to provide unemployment insurance and other support to people who are of lower income and lower means that aren't going to be able to make their rent payments. All those things I think are necessary, and we should continue to provide those things until it is absolutely clear that the economy is free and clear of this virus. I think we need a paycheck protection, paycheck guarantee, paycheck security program that actually is to all businesses of all sizes. You can provide it through the employee retention tax credit. This will give money to businesses to help pay for some of their operating expenses and also to pay for their payrolls. And you target it to those companies who have revenue declines that are more than 10, 15%, because those are businesses that are getting hammered most by the virus. That way you keep workers connected with their employers and not pushing them out into unemployment and into the unemployment insurance program. And the second thing we need to do for the longer haul is a massive infrastructure program, because we are going to have high unemployment in many parts of the country for a long time to come, and it's going to be very difficult for people to move. I mean, one of the strengths of the American economy is when you lose your job one place, you pick up and move to another place where the job is. That's not going to happen in this environment where people are scared to move, even come out of their homes. So we have to take the jobs to them, and that's what a major infrastructure program would do.
Is there a world in which we could shift all supply chains to the U.S. and be essentially fully self-sustaining?
This is one of the things I fear the most coming out of this crisis, and that is we will step back from the rest of the world. We were already doing that, in the wake of the financial crisis, and of course President Trump has been very suspicious of our relationships with the rest of the world through international trade and immigration and foreign investment. But after this crisis, I think it's going to be very difficult for policymakers to re-engage with the rest of the world. And by the way, the rest of the world is going to have a hard time re-engaging with us. So our economy will be less globalized to all our detriment. Our economy will be diminished by that.
We have seen some estimates of unemployment getting as high as 34%. Do you think it could get that high, and what would that look like?
Well, I can construct very dark scenarios. It depends on the virus. If we get a second wave, then yeah, I think unemployment will get into the 20s. You could construct a scenario where it gets higher than that. If a business has to re-shut down again, it completely will wipe out confidence and sentiment. So I can get there pretty quickly. That I wouldn't make that my baseline most likely scenario, but that would certainly be a scenario.
And what is your baseline right now when it comes to the labor market specifically?
The U6 underemployment rate, which will include people who aren't counted as unemployed because they can't actively search for work but are effectively unemployed, will be somewhere between 25 and 30%. So that's probably closer to that 30% unemployment rate you were talking about. And then we should start seeing some improvement as we make our way into the summer months as businesses reopen. But even after businesses reopen, I suspect the unemployment rate is going to settle in somewhere in the high single digits, close to 10%.
Especially given how we're going to need workers in new places, what's going to happen to the labor force if we shut down immigration, if we continue to be very restrictive on the people who can come into this country?
Agriculture, construction, leisure and hospitality, these are industries that are going to need those workers. Maybe not this year, not next year because of the virus and the unemployment, but certainly longer run, they will be necessary. But even, arguably as important, if not more important, is, immigrants are key to innovation and ultimately technological change and productivity growth and the growth in the standard of our living. They are, by definition, risk takers. You don't pick up and leave your country to come to this country if you're not a risk taker. And those are the risk takers we need to drive the engine of growth that are key to what makes our economy different from every other economy, and that is our entrepreneurship and the fact that we start businesses and we innovate. One of the gems of our economy is our universities. We have the best universities in the world. They produce the best science, the best economics, the best business, and all the disciplines, the very best come here. And if we don't attract them and then bring them here, then we're going to suffer as a result of all of that. Maybe through online education and other methods, we can continue to connect with those students. But, barring something like that, I think we will be much diminished because we're not going to be attracting the same number of students and quality of students as from other parts of the world as we have historically.
What's the biggest risk to the economy right now and then in the longer term too?
Well, the irony is the biggest risks in the near term is opening up too fast. I mean, opening up too fast really risks re-intensifying that virus. And if we have a second wave, then we're going to go in a whole nother world of hurt. We're going to be calling this period a depression, not a recession. But in the longer run, the biggest mistake would be not to engage with the rest of the world and to open up. We need to embrace the rest of the world and put together, systems so that we don't have these kinds of pandemics. We're a globalized economy, a globalized world. We need to have the systems in place that can handle globalized problems like things like a pandemic.